Founding father Benjamin Franklin once wrote, "In this world, nothing can be said to be certain, except death and..."
No.
No.
Don't say it. Please don't say it. Please don't say it.
Taxes.
You said it. You said it.
Look, taxes are not fun, but they're an unavoidable part of life. From grain in ancient Egypt to dollars in the United States, governments have collected forms of payments throughout history to fund public projects, like roads, sewage systems, and militaries. Tax amounts are often based on what a person earns, buys, and owns. So the more you know, the better prepared you'll be when you earn, when you buy, and when you own.
Okay, fine. What kind of taxes do I pay?
Well, when you get a job, you'll notice your take-home pay, or net income, is less than what you actually make. That's because a percentage of your money will be withheld from your paycheck to pay for income and payroll taxes. Federal income tax is only paid by the employee to the government, who then pays for things like roads, infrastructure, and the military. It's a progressive tax. This means the rate used to calculate how much you owe increases as your income gets higher. Some states and even cities also take income taxes on top of the federal amount. On the other hand, payroll tax is generally paid by both the employee and employer to the government, which then pays for Social Security benefits and Medicare programs. Payroll tax is 15.3% of your gross income, where each party pays half, or 7.65%. Sales tax is another common tax that you'll pay on most goods and services. In most states, this tax is added on the state and local levels to pay for things like police, transportation, parks, and education. A portion of the sales tax usually goes to the state, to the county, and to the city.
Is that why I had to pay $108.25 for this sweet artwork, even though the tag said it was $100?
Yep, that extra $8.25 is a sales tax, and in this case, an 8.25% sales tax. But sales tax isn't paid on everything. Rules vary from place to place, but most of the time, medications and basic foods found at grocery stores aren't subject to sales tax.
Whoa, hold on. I bought this rotisserie chicken, and I had to pay a tax on it.
Ah, that's because it's considered a prepared food, whereas if you bought a frozen rotisserie chicken, it would not be taxed.
What?
It can get complicated, I know, but it's just the start when it comes to taxes. If you someday own a home or some land, you may have to pay property tax. Then, if you made a profit investing, there's a capital gains tax. Own a business? You may have to pay a franchise tax on the net worth of its capital.
Really?
And buying some soda with that chicken? It might require an excise tax.
You kidding me?
Oh, and that vacation you're on? There's probably an added travel tax.
Oh, come on.
Okay, I get it. Taxes are everywhere. But is there a way to reduce the taxes I pay?
Fortunately, there is. When it's time to do your taxes, you can claim things like charitable giving, mortgage interest, and healthcare costs to reduce your taxable income. These are called deductions. On the other hand, credits, like the child credit when you have kids you can claim as dependent, are subtracted from the amount of taxes owed. So, now that you know a bit more about taxes, it's time to take action. 1. Once you've got a job, keep a record of all the income you earn. You'll need this information when you file your annual tax return with the Internal Revenue Service, aka the IRS. They're responsible for carrying out the Internal Revenue Code enacted by Congress and collecting federal taxes. Not paying your taxes is called tax evasion, and it's a federal crime. You could end up paying a fine or even face jail time. 2. Know what taxes you are responsible for paying, budget for them, and pay them on time. The deadline is called Tax Day and is usually on April 15th. If you miss this due date, you might have to pay more money. 3. Get involved. All government employees and everything the government does is paid for with your tax dollars. It's your responsibility to know how your money is being spent and make sure it's not being wasted. When taxes go up, make sure you understand why. After all, you'll be paying for it. Contact your representative, school board, or city council members if you feel funds are being mismanaged. Taxes are an unavoidable and frustrating fact of life. But the more you know, the less likely you'll be surprised on tax day, payday, or shopping day.
Whoa! Are you wearing a limited edition organic free-range black t-shirt from Leo Vuitton?
Why, yes, thanks for noticing.
Isn't that like $500 each? Where'd you get the money?
Oh, I used the free money that I received from my student loan.
Your student loan? Wait. That money isn't free. You have to pay it back with interest. It's called a loan for a reason. Student loans are a kind of debt.
Are you sure?
Yes. Look, it's great to be excited about starting adulthood and going to college, but you should be very careful about jumping right into a ton of debt. If you're going to take out a student loan, though, you better learn about what you're getting into, because you could be paying it back for decades. There are two types of student loans, private and federal. Private student loans come from private banks, while federal student loans are funded by the U.S. government, aka taxpayers. Since federal student loans typically have lower, fixed interest rates and more repayment options, they tend to be more popular than private student loans. In fact, about 92% of all student debt is from federal student loans. Most federal student loan debt comes from direct subsidized loans, direct unsubsidized loans, and direct plus loans. All three are available to undergraduate students who need financial assistance. However, only unsubsidized and plus loans are available to graduate and professional students. Plus loans are also open to parents of undergraduate students who need assistance covering any costs not covered by subsidized or unsubsidized loans.
Subsidized? Meaning
the loan's interest is paid by the U.S. Department of Education while you're still enrolled in school.
Nice.
An unsubsidized loan's interest is not, which means the interest will continue to build up while you're in school, adding to the total amount you'll have to start paying off after you graduate.
Whoa.
If given the option, accept subsidized money first.
So, a subsidized loan is freer money for everybody.
Nope. You have to qualify for subsidized loans by showing financial need. On the other hand, unsubsidized loans and plus loans are available to anyone who applies. Student loans can be good debt if you use them to acquire skills necessary for your desired career. However, it's important to be reasonable and responsible about the amount you borrow. Is there evidence that shows your chosen college major will lead to a career you want? How much does your future job pay? Is it enough to help you pay off the debt you're getting into to study for that job? This should influence where you choose to go to school and how much money you should borrow.
So, I really have to pay the money back.
Yes, you do. Unlike other kinds of loans, student loans cannot be cleared under standard bankruptcy. This means you're responsible for the debt forever. Yikes! That's true even if you don't finish school or can't find a job. And because student loans increase your debt-to-income ratio, it can make borrowing money for things like a car or house difficult in the future. So, once you've filled out your free application for federal student aid, also known as FAFSA, it's time to think about your options. First, consider whether you actually need a student loan and how much you need. Explore other kinds of financial aid, like scholarships, work study, and grants, many of which won't require you to take on debt. Or consider community college as a first step before transferring to a university. Maybe you could even work, save, and take classes as you can afford them. Second, whether you take a private or federal loan, be sure you're clear on the loan's terms and conditions and understand your legal obligation to pay it back. Third, keep copies of all the paperwork related to your student loans and keep track of how much money you borrow. It can add up fast. Be sure to calculate the payments into your personal budget. If you're having trouble making payments, contact your loan provider. They may be able to put your loan into deferment or forbearance, which temporarily reduces or pauses payment if you show that you have a need for those accommodations. Last, make your payments on time and for the full amount required by your plan. A loan will be considered delinquent if payments are not received, and it can even go into default, which can have some major consequences. Because college tuition is much higher than it used to be, the need for student loans has significantly increased. As a result, more than half of students graduate with debt, taking an average of 21 years to pay off. So, choose your next path wisely and invest in education that is going to give you a lifelong return and not years of debt.
Hi. I really need to return my Leo Vuitton t-shirt.
Have you ever noticed how some people always seem to be broke even though they have a good job?
No way!
Why is it that so many millionaire athletes go bankrupt as soon as they retire? The truth is, there are a lot of ways to make money, but not everyone uses the money they make wisely. They spend too much on things they don't really need. Then when times get tough or they want to achieve a big goal like buying a house or retiring early, they realize they don't have enough money left. If you want to make sure you're being smart with your money, you need at least one very important thing: a budget. So, what is a budget? A budget is a plan that will help you keep track of how much money you make, how much you spend, what you spend it on, and how much you save. We'll look at 1 month as an example. Let's say that when you combine your allowance and the money you earn from your part-time job, you make $2,000 per month. That total is called your income.
So, what kind of budget should I use to make sure I'm being smart with my income?
There's a known rule from professionals. It's called the 50-30-20 rule. That means you can spend 50% of your income on your needs, 30% on your wants, and put 20% away in your savings.
So, what exactly would my budget look like if I wanted to follow the 50-30-20 rule?
For most people, spending is easy and saving is hard. So the first thing to do is set aside the money you should be saving. According to the rule, that means 20% of your $2,000 income, or $400, will go straight into your savings every month. Don't dip into your savings until you really need to. Eventually, this is the money that will be there for you in an emergency or to put towards something expensive. Some people even start saving for their retirement so that they can travel and have fun when they're done working. Don't be afraid to think long term. Okay, now that your savings is put away safe and sound, you can look at the rest of your budget. 50% of your $2,000 income, or $1,000 a month, is what you should keep handy for your needs, things that are absolutely necessary. When you're older, this will be things like house payments, groceries, medical bills, and stuff like that. Right now, your needs may be clothes, lunch money, sports equipment, or maybe a car one day. Finally, you can spend 30% of your income, or $600 a month, on your wants. In other words, things that you enjoy, but aren't as essential. This will be the money you spend on going out with friends or shopping. Your wants may be important to you, but they're not as important as your needs or savings. So if your budget is ever out of balance and you need to reduce your spending, this is the category you should look at first. Some of your wants may seem small, but they really add up. Like if you spend just $3 at the vending machine every day, it doesn't seem like much, but at the end of the year, that's about $1,000 you could have saved for something awesome instead. So, do you think you're ready to make your own budget? Just follow a few simple steps. Number 1, figure out your income.
That's how much money I make every month.
If you make money in a couple different ways, be sure to add it all together so that you're working with your total monthly income. Number 2, divide your income into percentages, following the 50-30-20 rule, so you can see exactly how much you should be spending on needs and wants, and how much you should put away into your savings. Number 3, prioritize your spending. Think about things you already spend your money on and what category they fit into. Then decide what you need to do to get your spending and saving habits to match your new budget. Number 4, set some goals. It's always easier to save up money when you have a goal in mind. Maybe it's a trip you want to go on, or something nice you want to buy, or maybe you just want to have peace of mind in case of an emergency. Figure out how much money you'll need for it and how long it will take to save that up. Knowing what your financial goals are is great motivation to stick to your budget. All right, now that you've got your budget and a plan to achieve your goals, you can enjoy the confidence that comes from being more prepared for those surprise expenses that life might throw at you. Just remember, a budget is not an end in itself, it's a tool. A way to help you use every dollar wisely. It isn't about hoarding all the money you can get, but saving it so you can be ready for the unexpected and enjoy life.
Did you know 95% of U.S. households put their money into accounts at banks or credit unions? These checking and savings accounts are supposed to make managing your money convenient, protect it from theft and damage, and prevent it from getting lost.
Checking and savings. What's the difference?
A checking account is a transactional account. This means you can deposit money into it and withdraw cash from it generally without any limitations. People use checking accounts to cover everyday expenses and purchases and to pay their bills. A savings account is a deposit account. This means you can put money into it, but you're limited to the number of times you can take money out of it per month. People use savings accounts to hold their emergency funds or to save money for big ticket items like a car or a vacation. Savings accounts pay you a small amount of interest, which means your money will continue to gradually grow even if you don't make any more deposits.
Okay, I get it now. But which account should I have?
Well, lots of people use checking and savings accounts together. Checking to manage their daily transactions and savings to store their money for a later date. When you have both accounts, you can transfer money between them with just a few clicks of a mouse or swipes on an app. Move money into your savings to save, and then, when you need it, move money back to your checking, say, to cover an emergency expense.
All right, that sounds easy enough. But are there any other benefits?
Yes. For one, no more paper checks on payday. Your paycheck can be directly deposited into your checking account. Or say you don't like carrying around a lot of cash. When you open a checking account, your bank will give you a debit card. You'll also receive a box of personal checks, which are bank-issued pieces of paper. Both debit cards and checks are directly tied to your checking account, and you can shop with them just like cash to pay people and businesses for goods and services. You can also use them to withdraw money and pay bills. If you use a debit card, the money will be withdrawn immediately from your account. If you pay with a check, the amount won't be withdrawn until after the payee cashes the check. But watch out! Always be sure to have enough money in your account to cover the charges made with debit cards and checks. If there are insufficient funds in your account, the check or the charge will bounce, and you'll be subject to a non-sufficient funds fee. On the other hand, if your bank covers your insufficient funds and processes the payment, you will be charged an overdraft fee. Another awesome feature of some checking accounts is mobile check deposit. This tool can take care of that pile of checks you got for your birthday in just a few minutes. All you have to do is take pictures of them using the mobile check deposit feature in your banking app, and voila! Your money is in your account without ever stepping into a bank.
That sounds convenient, but I'm broke. Is it free, possibly?
Well, some accounts do have monthly maintenance fees. This is a small amount charged by banks to manage your accounts. Sometimes this fee can be avoided by maintaining a minimum balance. Minimum balance fees can also be avoided by maintaining required minimum balances in both your checking and savings accounts. Other fees, like account and activity fees, wire transfer fees, ATM fees and surcharges, and stopped check fees, can be avoided by understanding the rules and being responsible with your transactions. Fees vary from bank to bank, so be sure to ask about them when setting up your accounts. Now you know the basics of checking and savings accounts, so it's time to take action. Step 1. Shop around before you open your accounts. Determine if your bank has any minimum deposit amount requirements, minimum balance requirements, withdrawal limitations, or anything else that might result in a fee. You don't want any surprises. Then compare the interest rates on any savings accounts that are offered. Also be sure to check for account features that you want, like online banking or mobile check deposit. Step 2. Set up your accounts by filling out an application in person or online. You'll need to provide basic information like your name, mailing address, phone number, email, date of birth, and social security number. A government-issued ID like a driver's license and money for any initial deposits are also required. Step 3. Keep a close eye on your accounts to avoid accidental overdraft fees and fraud. You should always know how much money you have in your accounts. And if you see any activity that you don't recognize, contact your bank right away. Now that you're all set up with your new checking and savings accounts, it's time to stop storing every dollar in that piggy bank and start managing your money like a boss. Watch more at PragerUkids.com. And parents, don't forget to subscribe.